Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting now the Asian Session Live Market Analysis of the Forecast webinar on 13th of November between 5 and 5:30 GMT. I go on the forecast for this week 9 to 13th of November on 9th of November, that is on Monday, and we are on 13th now on Friday. So I give the forecast on Mondays and try to review it on Friday and see that how reliable the forecast is. The forecast is given in the form of session-wise forecast, all the 3 sessions of the day from Monday to Friday. And also, I give the levels in which the currencies are expected to swing in that particular week, the 4 majors and the 2 commodity pairs. Besides, I'll do the market reading to fine-tune the forecast and explain to you how exactly the market reading is necessary on a daily basis to fine-tune the forecast. And finally, I will explain the importance of the trading strategy. Ultimately, the trading strategy is the one which is going to help anybody to earn consistently money from the other market, not by becoming bullish or bearish alternatively, depending upon the market sentiment which is created. And the players act against such created sentiments from time to time. So for those of you who are interested in getting more details about this, can contact me through email dr@i-knowindices.com or contact through the Skype iknowindices without hyphen @hotmail.com. Let me go to the next slide. Okay, so I'm going to touch upon the derived forecast to start with. Later on, talk about that of the market reading, referring the current market level to that of the initial lows and the highs, which are set around 3:30 GMT. Then also I'll explain about the trading strategy. This is the forecast page, what I have given it on Monday. You would have noticed that they pretended as if euro is not having enough strength to gain the level. They just gained and dropped euro, and slowly gained the level in the case of GBP in order to drop euro GBP cross. And then subsequently, they firmed up from that of midweek and then started gaining the levels. Yesterday also, they made the slide during that of the US session. And towards close, they gained the levels. And now you find the raised levels in the case of euro and GBP. They are expected to make further rise and then make a small sideways slide during that of the European session and then continue to gain the levels during that of the US session. So be cautious, don't get struck with that of the sell and buy trade. And today the players are expected to squeeze on the upside. So dips are buy opportunities, but still use the hedge order to limit the risk. So the market has moved in tandem with it of the forecast what I have given. And you know that on Monday when we are talking about, you have been referring to that of the previous Friday. After that of the non-farm payroll, euro and GBP made big drop, and people immediately talked about that euro could go to parity, and we will come across GBP also going below that of 1.50 and things like that. So once the market sentiment is created, the traders become more and more bearish, and they imagine so many lower levels and thinking that that could be the support and the still lower level could be the support, etc. Probably they don't think that 0 is the support, but immediately they become bearish. And finally what happens, the players induce the traders to feel that euro doesn't have strength to go up, JBP does not have strength to go up and things like that. Then the traders start taking the sell positions. Once the traders take sell position after liquidating the long positions, the players slowly gain the level. This week they have firmed up, and next week they are expected to gain more aggressively in the case of euro and GBP, because they will start making the yearly trend reversal move from that of next month. So that will be more upside aggressive gains. With regard to the levels in which the currencies are expected to swing, Euro came down to 1.0675, the expected low was 1.07, and then started gaining 100 pips. They gained and they come to 1.08 area, and now it is just trading slightly below that of 1.08 towards close of Japanese session. They will gain the level, and in the case of GBP, 1.5042 as the low, the expected low was 1.50 and mathematically derived level, and the high they are set so far is 1.5247, and they are expected to gain more today and also in coming days. Then in the case of USD yen, they gained the levels to 123, and then subsequently they are making only sideways move on the small slides when Euro and GBP are gaining the levels. This is mainly to rise the levels in the case of yen crosses. So keep in mind that the denominator currencies, they are expected to gain the levels, but the numerator currencies also, they will swing and rise levels. And in the case of CHF, they are expected to come down to 0.99 briefly and then go up again to 1.01 area. So you find that whatever the levels they gained in the case of USD CHF, they are not losing it much. They are still holding above that of the parity in the case of USD CHF, and then they are making sideways move. So this is what they try to do it, and thereby Euro CHF and GBP CHF will go up. Then in the case of Canadian dollar, and it is expected to swing around 1.030 to 1.34. They came down to 1.3225 and then again come up. And they are holding around 1.32 slowly. They are expected to make the downward move. And in the case of Australian dollar, from that of 0.70 level, they gained to 0.715154, and slowly they are expected to gain the levels as well. So you find that most of the currencies, they have moved in line with the expectations of the forecast model. Then today I noted down the initial lows and the highs for market reading around 3:30 GMT. So now we will try to compare it with the current market levels. Euro formed the low 1.0785. They have not breached the low, and the high is 1.0817, which is also not breached. In the case of GBP, 1.5216 was the initial low. They breached it and came down to 1.5208, and then the high is 1.5236, and then that is held. So they just made a brief downward stop in the case of GBP just to create the market sentiment, and then later on they are expected to gain the levels. So such downward stop are buy opportunities. In the case of yen, 122.50 is the low, 122.78 is the high, and they are not breached the low or the high. In the case of CHF, 1.0001 is the low, 1.0017 was the high. They just breached the high by 3 pips and went up to 1.0020 and come down. And they are likely to come down when Euro is gaining the level. And in the case of Canadian dollar, 1.3281 is the low, 1.3294 is the high. They just breached it by about 4 pips, and then they are holding above. So they will just make a brief upward move, because you can see that USD CAD and Australian dollar are showing positive net change, indicating that they are making the contrarian move. So after handling the European crosses, the players are now handling the commodity crosses. Then later on they will come to the majors. So at the moment the majors are showing the USD gaining move, and in the case of commodities they are making the contrarian move by showing positive net change both in USD CAD as well as Australian dollar. And Australian dollar, 0.7121 is the low, 0.7140 is the high. They are not breached the low or the high. So let me give the trade call for you to try it in a demo trading platform. As you come across that euro is now closer to the low, so we'll try to take a buy position closer to the low or buy limit order just 4-5 pips below that of the market. I get the buy limit order, and the exit order will be about, today being Friday, they could make aggressive gains. So we'll keep 45 pips. And if the going is good, we can maximize to 75 pips as the take profit order. So 45 pips above that of the market. Above that of the entry level, I kept the exit level and the sell stop, that is the hedge order, 30 pips below that of the entry level. In the case of GBP, again a limit order. $1.5208. Again 45 pips. So limit order. Then the sell stop 30 pips below that of the market, 0.517. Okay, these are all the two trade recommendations. So buy limit 1.0785 with 30 pips hedge order to limit the risk, and then take profit 45 pips above that of the entry level, because today being Friday, their players are expected to focus more on the majors and gaining the levels. The forecast also says that they will gain the levels during the Japanese and the US session, and sideways move could be seen during the European session. And similarly, in the case of GBP also, 1.5208 will be the entry level, and exit will be 1.5253, and the sell stop or the hedge order will be at 1.578. So as I explained that the daylight saving system is switched off, as a result you come across the changes with regard to the market timings. So Japanese session is from 0030 to 7:30 GMT. 7:30 to 8 is the gap time. 8 to 14 GMT is the European session, and 14 to 14:30 is the gap time. Then 14:30 to 21:30 is the US session. 21:30 to 0030 of the next day will be the gap time before the start of the next day. Each session is subdivided into 3 sessions, namely early, mid, and the late sessions. Early and the late sessions, they handle the majors, and the mid sessions, they handle the crosses. And depending upon the currency you choose to trade, you can choose the right time to trade, so that quick moves will happen in the market, so you will not feel frustrated or your patience will not be tested. Then I'll come back on Monday, 16th of November, and give the forecast for the next week. In the meanwhile, if you have got any question pertaining to the market, you can ask me in the chat window, and I'll be willing to answer to those questions. And the recording of the webinars are available in iknowindices.com/blog, and also you come across, which is displayed in FX Street, immediately, automatically it is being displayed in FX Street. We just go to fxstreet.com and click Analysis and Insight. And below that, you come across the sub menu, Watch List. And if you click the watch list, all the recorded webinars of different speakers will be displayed. And if you fail to attend to the live webinar, you can always go to the recorded webinars and try to get the information regarding the market. So if you got any question, kindly ask me. I'll be willing to answer those questions. Meanwhile, I'll show the forecast sheet. Now we can come across in the market that Euro and GBP are showing negative net change. USD and USD CHF are showing positive, nominal positive net change, showing the USD gaining move. Slowly they will reverse it, and as they gained, unassumingly yesterday during the US session, they will try to make a gaining move of that nature. And probably yesterday, many people were surprised when Euro and GBP spiked up after that of Ellen's speech, and they were giving an interpretation that she has not mentioned anything about the interest rate. See, even when the expected people do not even open their mouth, they will give an interpretation pertaining to that. That is how the market sentiments are being created. So keep in mind that the players, what they created as the sentiment is not permanent, and they can simply change it from time to time and give various excuses. So one such excuse is yesterday's excuse when they are talking about the not mentioning about interest rate decisions. Then Hopkins has got a question. The initial that you show in your presentation, that means initial lows and the highs, and what I see in the demo account of Saxo Bank is not the same. See, actually, we have to go into that of the live market code page and note down, because earlier I was getting through Saxo Bank the interbank code page. But what happens now when they come to know that such interbank code page is being used to read the intentions of the players, they stopped providing it. So I am trying to get it from various sources, and Saxo is also available, but it is not showing the GMT time, or it is not showing the actual pip change. Instead, they show it as a percentage change. They purposely see that we don't track the players. So what to do? So, but what you see in the demo account, it may not be, it all depends. If you set the GMT time frame, then the lows and the highs will be there. If you set your local time in the trading platform, then they tend to vary. So always try to get it from the line code page, what I have given it at the moment. This is somewhat reliable, what I have given it as investing.com. But we are able to understand the limitations now, because in 2000, 2001, etc., the code page was showing, the Saxo Bank code page was showing accurately the interbank codes. direct feed. But later on, when they found that it is being used for trading against, trading along with that of the players, they stopped it. And even now in investing.com code page, they do not want to provide the GMT time, and they are giving the Eastern Standard Time. Whereas if you go to their web page, they give the GMT time. So all trying to play a trick, but still we should not become upset. We have to overcome such situations, and that is why I got the GMT time shown here in this window, and I simply ignore the time shown in that of the live market code page, but the codes are all reliable. Not as per a question. The slide of planned trades. Show the slide of the planned trades. I will show it. Then Monal. I wanted to know currently the levels could be considered as the lowest level before the yearly trend reversal. Could we expect another downward stop and off? Of course, the hedging would use to place protectors. See, they normally use the prime data release as the main market triggering factor in order to show new lows and the new highs. So they will try to, or they will make an attempt to see that any level stop is being hit, so that when they hit the stop which is quite far away by any chance, then they will make huge profit. So always keep in mind that the players are making such moves in order to make huge profit for the year end, and especially during that of the yearly trend reversal time, they are known to make whips of moves, and that will be fear creating move. We cannot avoid it. So for the beginning of December, they could make a quick downward extended stop and then start gaining the levels, and quickly or aggressively gain the levels during the month of December, when people are all thinking that the market is in holiday mode, Christmas holiday mode, there may not be much moves in the market, etc. They very aggressively gain the levels, and for the new year also they continue to gain the levels. Many occasions they have done it. They sometimes what they do is they drop during the year, for a year in December, and continue that drop in a big way during January and February. But this time they are expected to gain the levels during December in a big way and continue to rise during January and February. So they alternate their strategy, so from time to time. But if you ask anybody what is going to be the bottom, it will be a sheer calculated guesswork, nothing more than that. And if they want, the players might show. Even the players won't be knowing. Only if a lot of stops are aggregated lower than that, the current low, then they will make an attempt to hit it. Otherwise, if there are only few stops, and on the other hand, there are more stops on the higher side, then they will try to straight gain the levels without giving profit booking opportunity to that of the short sellers. So always when they are holding the market at a current level, when the traders are committing positions, they try to see whether the long holders are more in number or short sellers are more in number. If the short sellers are more in number, they make a quick upward move to hit the stops. The long holders are more in number, then they make a drop and hit the stops. So mercilessly they do this every time. So no more questions. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and you people who have come here to listen to the webinar, and hope you are able to understand now how evidentially they create the market sentiment and act against the traders holding positions. So always keep in mind the players induce the sentiments and then act against the traders once the traders become victim to that. And that is the only way to earn money from that of the small traders and also the big institutions from time to time. So I take this opportunity to wish you all very happy uh, trading for the weekend and also a pleasant weekend. And we'll come back and see each other on Monday and try to understand how exactly the players are expected to make further moves in the market. Thank you, one and all. Wish you all happy trading.